Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast, Tuesday, October 18th, 2016. While you're watching, do us a couple favors. Go to twitter.com/TuskMediaLLC. Give us a follow, much appreciated. Also, if you're watching us on YouTube, hit that subscribe button. That way you get all our content, whether you're watching on Seeking Alpha or on Twitter or wherever you're getting this feed. That'll make sure you get it in case we don't post it everywhere. So sometimes we do stuff that's not even related to investing. Yeah. It's pretty fun stuff. We got some stuff like that coming up later in the week. So hit subscribe so you get that. And also if you're listening on iTunes, go ahead and hit subscribe. Then delete all of our content and then re-download it. It helps our numbers out a lot. And leave us a 5-star review. I think that's literally everything you could possibly do to make our day better. Yeah. So I think that's it. I'm Andrew Hall. Ben Nye, what's up?
Not too much. Well, actually, lots up. Because a lot of earnings, a lot of news going around.
Speaking of up, markets.
Yeah, markets
going up. Tremendous segue right there. That's why we get paid the big bucks. Futures up pretty much across the board. Dow futures up 59 basis points. S&P futures up 62 basis points. NASDAQ doing really well in futures as well, up 69 basis points. Gold up 41 bips. Oil up 86 basis points. So lots of green. We're going to talk a lot about earnings, which I think is probably the major storyline here. But before we get there, let's just talk about a rash of change that we're seeing. Just moving through, spreading like crazy. CEOs jumping ship.
Yeah. So it is jumping ship. So I wonder if there's something more to read into that, or is it just kind of this generation is finally exercised? You know, they've got to the point where they feel like they can hand it off to the next generation, or if there's something more to it. So we've lost the Visa CEO last night. Yeah. He says that he's been in San Francisco 3 years. All his family is in New York, and he wants to get back there and spend more time there.
Kind of seems like an excuse, right?
Kind of seems like an excuse.
I think he knew where his family was and where San Francisco was before he took the job. Just my suspicion.
Indeed.
I don't think you're CEO of a company like Visa without knowing the distance between New York City and San Francisco.
Right. So, I mean, it'll be interesting to see where that goes. It seems like Visa's been a pretty full valuation for quite some time, but they just keep getting more volume, and when you're in an oligopoly like that, it's a nice industry to have.
Yeah,
that nice business to have. So
odd perch to leave.
Yeah, indeed. Then we're also losing the Caterpillar CEO, Doug Oberhelman. He has not had as good time as the Visa CEO is not in charge. He's made the most awful acquisition, one of the most awful acquisitions I've ever seen. He bought Bucyrus to really get into the mining industry. But the problem is he did that in 2012. So if you look at
mining is so hot right now.
If you look at the commodities index, Wall Street Journal had a good write-up about this yesterday. If you look at the Bloomberg Commodities Index, it turns in 2012. They buy right at the top of the market, take massive write-downs, and just ride it all the way down. Stock's actually up since his time in charge, but earnings have basically declined every single year. Sales have been down. So tough time for Oberhelman. I guess he's going to stay on just a little bit longer, but did not leave a legacy that I think many people would be proud of. Continued guide downs. You couldn't take Caterpillar at his word whenever it came out with earnings. The third one, of course, is Wells Fargo, and we talked about this a little bit before, and he was really forced out.
Yeah.
So if Visa was kind of left on his own accord, and Caterpillar kind of got the nudge, wink, wink, maybe it's a good time for you to leave, Stumpf was gone. Yeah. And he was fired.
He showed up and the locks had been changed.
Right.
Not a good spot to be in. Hard to feel too bad for the guy. We talked about that. And, the breadth of that quote-unquote scandal. I don't know if scandal's the right word. Yeah. I think we throw scandal around a little bit loosely, but the breadth of that was certainly hitting kind of a tipping point.
Yeah.
He was kind of due to be pushed out there. So lots of change in CEO. Kind of interesting. To your point, at the beginning of this particular topic is, again, what is the read-through here? It may be coincidental. It may be that all these things are going, but then you start to think about, okay, well, people that we typically, would kind of lump into one basket in terms of skill sets, in terms of aspirations, in terms of capabilities, and in terms of earning potential, are starting to see this as a way to get out. And maybe not so much, our friend at Wells Fargo, but, everybody outside of Stumpf maybe electing to kind of take a different route. You start to wonder what they're seeing, whether it's for their company or for, the markets as a whole. So it's certainly something to think about. Again, we're talking about 2 or 3 guys. At this point, we're not talking about, hundreds. We're not seeing a mass exodus of CEOs, although I do wonder if can you think of any time in history where it just seems like, hey, all of a sudden 15, 20 guys are jumping ship?
I can't remember of a big point like that.
That's mad about that.
What is interesting, though, is a lot of times you see these exits and you can excuse them, but then if you put yourself in that situation and say, okay, now, if I was in control of Visa, or if I was in the situation of Oberhelman, what would I do, and why would I make this step? And a lot of times, if you can kind of look at it through that lens, it might give you a better understanding and maybe almost more insight into, now, how do I make an investing decision based on this incremental news that I have.
Yeah, so something definitely to keep an eye on. And I think, we put, I would say, a premium on leadership, an appropriate premium. It's certainly, when we start looking at valuations and prices, we rarely start with leadership. But it's certainly something that, as we're screening stocks, so to speak, or as we're talking ideas in PM meetings, a lot of times we look at the management team.
Right.
We look at that quite often. And it's certainly something to think about, too, not just in terms of who's leaving, but also who's coming in. So, I guess a word of caution to investors is look at that. And sometimes what's wild is you think you're going to know exactly the type of person they'll fill these positions with, whether it's in-house or they bring somebody in from another shop. And a lot of times it's actually not. I mean, recently it seems like we've had a couple of surprises, whether it's at CEO or CFO replacements, where we had to dig in and do some research just to figure out who the guy was that was replacing someone that was relatively well known. So you never know. Keep an eye on that. Definitely something to keep a watch on. Oregon, place near and dear to your heart. The university there getting a nice little influx of cash.
$500 million from Phil Knight, the creator of the Oregon Ducks, pretty much. So he's spent a lot of money in boosting the football program and the sports in general there, and now he's putting more money into science. Now he's hiring a bunch of research analysts and scientists, and he's building buildings. But you kind of wonder, is this more a sports science deal, or is it more of a genuine disease science?
You got to feel like he's trying to research a way to actually get extra points after they score touchdowns. Because the whole going for 2 every time, not working out.
No, it's not. It's not. They tried to go for 2 against UW when they were already losing by 30 points. I'm like, come on.
It's desperate. It looks real desperate. So Oregon football struggling. Hopefully this $500 million gift to science has nothing to do with the football program. That's, I guess, the intention and the hope. But the cynic in me says we'll see where that money is.
Yes.
Lastly, we're going to talk a lot about earnings, and we're actually going to have Matt Krozak come up here in just a few minutes, talk about a couple companies, because we're starting to get into the heart of earnings season. But one company we're going to touch on while Ben is up here is Philip Morris. So talk to me about what you're seeing, what was reported, what was expected, all that good stuff. Kind of within the context, again, if you go back to our YouTube channel, I think about 2 weeks ago we talked about earnings, what they mean, and kind of how you have to look at earnings in terms of, okay, what did the company actually make? But equally important, what did they make relative to what Wall Street expected? Because no one likes a surprise, especially a bad surprise on Wall Street. So talk to me a little bit about what was expected and what we're starting to see.
Right, so Philip Morris International is a cigarette manufacturer. They don't sell any in the United States, but they are basically the global arm. So think, Europe, think Asia, think Latin America. And this is where Philip Morris is selling their cigarettes. And they've been struggling. They've had currency issues with the weaker emerging market currencies. They've been unable to push forward as many price increases as commensurate with the currency deflation. So they've had some top-line pressure. And also, when you look through Philip Morris's financials, what would you say is the take of the government, just from the top-line basis?
I have no idea.
65%. So when they sell a cigarette, 65% of that goes straight.
I would guess significantly lower, and still thought my guess was too high.
Right. Yeah. And that's been trending upwards a little bit. And so their gross margin is actually, it's enormous before the government revenue,
Right.
but once you take the government revenue out, that gross margin,
Shave
ameliorates
2/3
somewhat.
out of that, and all of a
Indeed.
sudden, maybe we could get Barrett to graph that so people understand
Right.
what 2/3 of a pie looks like.
So they actually met expectations. They posted $1.25. The street was looking for $1.23. They also had a 4-cent currency headwind. So if you add 4 cents back in, that's $1.29. But that should have already been in analyst expectations. Analysts know what currencies have done, so they can adjust numbers accordingly. The issue for Philip Morris is continuing to get that volume through. They're actually seeing an accelerating decline in year-over-year volume growth. So last year it was about 3.9%, and actually that's for the full year is the expectation. This quarter was down 5.4%.
Wow.
So cigarette volume accelerating to the downside, revenue actually stable to up, and that's because they're increasing prices.
Right.
So how long can they increase those prices? That's a big question. Their dividend payout ratio is getting closer and closer to 1, which means that dividend is increasingly they have little room for error. So if earnings dip, then they're not going to be able to pay their dividend with the earnings that they're making. They could, sell debt or use cash on the balance sheet to pay that dividend.
It starts to get hairy.
It starts to get a little hairy. So right now, the trailing 12 months payout ratio is 98%. So hopefully when that currency, with the currency stabilizes, that they can actually cover that dividend a little better. But right now, that's really something to watch. It's one of the highest dividend payout ratios in the cigarette industry. The big option for Philip Morris, though, is iQOS.
Yep. We talked a lot.
We talked
I was
a lot
about to
about
ask you
that.
about this.
Yeah, so they're continuing to see tremendous uptake of their smokeless tobacco product. This is different than the vaping.
It's not vaping.
It's just a smokeless tobacco product, and it's made to be some very high class.
It looks
kind of
awesome.
product. And they have all these rooms that you can go into. They have special shops where you can go and enjoy the ambiance and enjoy your iQOS cigarette or smokeless tobacco product.
Right.
So Japan is the leader on this, but they're also launching it in a number of other countries as well.
And that's what you really kind of get to this cross section, because you start to look at a company that's seeing declining volumes, huge emphasis on increasing prices just to be able to kind of maintain revenue on the top line, but then at the same time, kind of this threat or opportunity, and that's the cross section. Is this smokeless tobacco, the vaping, all of that, is that going to become a cheaper alternative to rising cigarette prices that people will start to convert to?
Right.
And if so, how much of that will they be able to keep in-house? How much of their own, customer base will they be able to effectively cannibalize?
Yeah.
In the most favorable of ways, and kind of keep that in-house. I'm really excited about iQOS. We saw some on Amazon, incredibly expensive.
Very expensive.
I got really into vaping about a year and a half ago, and vaped all day. So kind of intrigued by it. Would like to get into the iQOS system and maybe play around with that thing a little bit. But again, kind of expensive, especially compared to the price point of vaping.
It has a little I in front of it, which deserves like a 25% premium.
Yeah,
no
so
matter
that
what.
implies, I don't know what the original I stood for.
I don't know.
Interactive, I don't know. But
It's like eco-friendly.
yeah,
I don't know.
yeah. So they make you think it's an Apple product.
Yeah, they
So
do,
people
yeah.
are like, oh, this is what Steve Jobs would have smoked. So I think that's really a lot of the appeal as well. So there you go, Philip Morris. Kind of keep an eye on them. Continue to watch. I think iQOS really is one of the leading stories, as well as currency battles, which kind of applies to a ton of stocks that we're talking about. So we'll get Krebsbach up here, and we'll go from there. Matt Krebsbach, what's up, dude?
Not much. How's it going?
Doing good, man.
How's that coffee treating you?
Coffee's fantastic. Krebsbach, Analyst of the Year, brought coffee this morning. I was hurting.
Really?
for some
It
coffee.
was like
Yeah.
Good.
Great morning. I was up a lot last night. Didn't feel real well. So, everybody say a prayer for me. Thoughts and prayers go out to me. Let's talk earnings. We're going to do this kind of for the next several weeks in earnings. We're going to look at individual companies that we want to talk about. That's kind of the nice thing about earnings, is you can kind of go out of your way to talk about anything you want to talk about. So we're going to start off today with Netflix. And let's start at the broadest sense, Netflix. Do you use it?
I do use Netflix. Pretty big fan.
Do you have your own login or do you use someone else's?
I do not have my own.
Ooh.
I'll just leave it at that.
Ooh, controversy. Yeah, I'm a big fan of Netflix. I kind of go in waves.
Right.
Big fan of their original programming,
Mhm.
and that's kind of starting to trickle into what they're starting to see in activity and user growth, which, as they reported yesterday, was really, really good. So
Before we get
original.
into that, let me hit you with this. What are
Yeah.
your top three
I was
original?
about to ask you that.
Were you really?
I loved early seasons of House of Cards. I've not watched the latest season.
Mhm.
I really like Bloodline.
Mhm.
I think it's fantastic, and I really liked Master of None.
Really?
I thought it was really
How
good.
many seasons of that are there?
There's just one out so far, but it's really good. It's the show with Aziz Ansari.
Yeah. I watched an episode or two of that. It didn't hook me.
I like shows that are like almost hard to define why they're like, you know what I mean? Like,
Mhm.
like I felt like it was pretty close to like normal life.
Mhm.
I kind of enjoyed that. So how about you?
I just got through Stranger Things. That was really good. I don't think you watched
That's like,
that.
yeah, that's high on my list.
It's got a lot of hype right now. It's still
Yeah.
going. I really like House of Cards too. I watched all that. Like you said, kind of flopped a little bit.
Yeah.
But early House of Cards is pretty awesome.
Yeah.
Like probably almost my favorite, one of my
Mhm.
favorite programs. I don't know what else is on there. I didn't watch Orange is the New Black.
I didn't watch that. I've heard that Last Chance U is fantastic. That's like the
No.
documentary series about the JUCO that all the football stars go to when they get kicked out of school or they don't get into school. I've actually heard it's awesome, and there's like a lot of those guys are playing like big time college football right now.
Huh.
So that's pretty high on my list. It's also great though, like we were talking about Lost, I think the other day.
Right.
I watched Lost like in real time, and then when I was in college, then my roommates jumped in like season 3, so I started over and watched with them. And then when I got married, my wife had never seen any of it, so it was like the first like we didn't even have a honeymoon, we just watched Lost. So
That's a real story.
yeah,
too.
yeah, no, we actually watched Lost. I want to say we'd been married for like 6 or 8 months, but we watched all however many seasons in like a month.
That's commitment.
Yeah, it was the good old days. I used to work at a gym, and I didn't have to get work till like 1. So we'd watch Lost till like 4 in the morning, like it was normal. But point being, it's also great for like marathoning stuff like that. I know a ton of people got caught up on like Breaking Bad or Mad Men and shows like that on there. So I think it's a force, man. It's
Yeah.
a force, and we're starting to see that really trickle down through some of their growth. I think for the story for Netflix, really for the last couple of years, has been subscriber growth. And I feel
Right.
like we've talked about similar topics when we've talked about things like Twitter and monthly active users and things like that. But now imagine the premium you would place on that if people are actually paying monthly. That number, I think, carries a lot more weight than it would like monthly active user on a social network. or something.
And I think for that quarter, they like earnings estimates were like 6 cents. And I think
Yep.
they reported 12.
Yeah.
Correct.
Yep.
I don't think that really matters for stuff like that.
No.
It's purely like the international and U.S.
Mhm.
Net ads.
Yeah.
Which they killed on for
Right.
that quarter.
Yeah, if you look at earnings and you try to back your way into a valuation, this is a stock that's producing 12 cents. So even if you
Forward
project that for the
Forward
whole
PE of like 300.
Yeah, you can't really come up with a valuation. So this is truly a growth story. It's
Yeah.
all about subscriber growth.
And investing in companies like that is so hard. Like
It's crazy.
I complain about that quite often.
It's
Like,
so frustrating.
Yeah.
And we've seen times where Netflix has like been the driver of the market in terms of actual outperformance and actual alpha. And if you're a value shop like us, sometimes it's really hard to.
And you can even, you
To
can,
get that,
you
you
can even
miss-
expand that into Amazon and
Yeah.
Facebook. It's
Yeah.
like, well, I don't want to pay 400 times earnings for a
Yeah.
company, but
Yeah.
then they're driving the market.
Yeah. So last year, I think we underperformed on equities. Most of our clients did. The market didn't really go anywhere. I think it was up like 1.38%. Does that sound right?
Yeah, pretty.
Sounds exact enough that it probably sounds right if you're out there listening or watching. So 1.38% was the total return for the S&P. It definitely was that. But we lagged a little bit, and then we actually started looking at leadership of the market. So much of that return was driven by those FANG stocks that we heard so much about. But so it's truly a growth story. But the big thing is, so Netflix, international streaming net ads, the estimate was 3.1. They're seeing 3.75 million. So solid outperformance. Stocks up really on that, because I think you have the domestic growth, but I remember doing some studies on this, and you start backing into how often people do share Netflix logins, and eventually you do get to a place where that's going to be capped. But the big thing is internationally, and they're starting to get original content for international markets. They're doing a lot in India, doing a lot of Bollywood productions just for the Indian market and things like that. So I think they're starting to see that really take off. Compelling story, again, it's a hard one. We don't own any Netflix stocks. You don't own Netflix, yeah.
Well, it's hard for me to get into how they can ever make enough profit to justify where they are right now. Like that, the original content costs a lot of money to put out, especially like internationally where you can't really take like Stranger Things and put it in like India or
Just
something.
put subtitles on it.
I don't think that really works that well though.
No,
Like you
no.
have to do like completely new programming,
Right.
which is like a whole nother expense base with a whole nother customer base.
Mhm.
I think that's really difficult.
And that's what's, to your point of like translating it and the joke about subtitles, like it really is interesting because so much of their content is so like narrowly niche.
Mhm.
Like
House
of Cards, like that would make
Yeah.
no sense with subtitles in another country. You would not understand that Washington dynamic, I don't think. Bloodline is set like so specifically in like coastal South Florida, like kind of all the stereotypes you think of like kind of sketchiness and crime. Like I don't know that that would resonate in the middle of Canada even.
Mhm.
You kind of get to these like really specific things. Orange is the New Black. The prison system in the United States may not like actually be a real home run internationally in terms of really attracting viewers. So that's the thing. I mean, it's going to be expensive, and you start to run into this idea of yes, growth is growing it, but at what point do they actually justify that valuation? And that's a big part of why we've kind of stayed away.
For me to like, if I was to actually buy Netflix, it'd be like this is a terrible like investment philosophy, but it'd be for like to Disney to maybe buy them out,
Right.
which is like I'm like obviously not going to do that, but
Right.
I can't justify their price
Mm-hmm.
based on anything other than that.
Yeah, no, I agree. And then I think you do have kind of the model of them just being so dominant in that space because it does seem like
HBO though,
HBO coming on.
don't rule them out.
Don't rule HBO out with the original content at least. But I mean, it's an interesting business model, and again, it's hard to. They're making money, which is a step in the right direction. You couldn't always say that for Netflix, but
Do you think they're going to meet those like net ads like next quarter? Those are pretty aggressive targets.
that's really aggressive. My gut is no, just because I feel like it's been a while, but I used to track this like somewhat closely, just to like keep an eye on it because I was just intrigued by the stock.
Mhm.
My gut is no, because it's actually a business where you don't have, it is actually very much content driven. So you will have people actually come on to watch a show.
Mhm.
And most of them stay, but not all of them. So I think it's so dependent on having as much intrigue in terms of programming that's coming out. And I think that's something that's a little bit hard to predict, even if you're kind of a media giant like Netflix has become. I think it's still hard to predict how much will people like this program, how viral will it get, how many people will subscribe just for that. So I think that's pretty aggressive.
I think you could also, if you're a user, you could be really frugal if you wanted to. This is like probably really micro and probably won't happen, but once you like binge on your shows, once you get through Breaking Bad and you watch the first season of Stranger Things, you're like, well, I don't really need to watch anything else on here.
And I've actually done that because when like 2 or 3 years ago, there's like nothing I was really interested in. We canceled, and it's way too easy to come back. Like they just make it like you literally can just log back in and reactivate. They should like at least make you have to re-sign up and make a new login, like just to make it a little bit harder to come back, so maybe you stay. But yeah, I definitely think you can kind of manipulate that system a little bit. Anything else on Netflix before we jump to something a little tastier?
Yeah.
Domino's Pizza.
Good intro.
Domino's Pizza, your favorite pizza place.
Big fan of Domino's, yeah.
Talk to me about Domino's, why you like it so much.
What are you talking about? It's awesome pizza. It's that simple.
Like it more than Pizza Hut?
Yeah, I mean,
More than Papa John's?
Numbers speak for themselves. I actually don't have Papa John's that much.
Wow, better ingredients, better pizza.
That's what they say.
Peyton Manning's.
Yeah, you a Peyton Manning fan?
The official pizza, Peyton Manning. So Domino's Pizza, estimates were about 90 cents for earnings. They came out.
They kill it too.
Came out with 96, which not only did they beat the estimate. A lot of companies, it actually seems like that reported thus far slightly beaten estimates, but they actually were on top of their range. Like the high end of the estimate range was 92 cents. So they really put up some solid numbers. I mean, it's pizza. It's crazy to me that like you could ever like outperform in the segment as well known as delivered pizza.
Like their same store sales, the number is ridiculous. 13% same store sales. That's like unheard of.
And the estimate was 9%. It's insane that 9% would be. I don't get that. Like either.
I agree. As much as I love Domino's, I mean, I'm probably
like for any people.
I probably helped that number out quite a bit.
Yeah.
Like,
shout out to the unit.
You're welcome, Domino's.
He's not an investor, but he is a customer. But no, like I don't know. This is one of those segments where it just seems like where is the like competitive edge in analyzing ordered pizzas and picked up pizzas. And it's crazy to think that 9%, like if you had asked me what the expected same-store growth would be, I would have said something in like the 1 to 3% range.
I would even like 4 or 5, but still not
expected
13.
was 9, and they gave us 13.
It'd be different if they like changed their formula. I think they did like 5 years ago or something. I remember that was like the kind of thing where they changed the formula, they did new crust and whatever, and it did get like noticeably better to me at that time. But it's not like that was the case this quarter, this year, last year. You know,
Pizza's pizza. We're gonna have to do a blind taste test on this podcast, I think.
And you can compare that to Pizza. I used to follow Pizza quite a bit when I owned Yum myself, like a year or two ago, and their same store sales like negative.
Mm-hmm.
Like in Yum, Taco Bell kills it, KFC's like flat, and then Pizza Hut like legs, and then they're plus 13%. That's
legs. The leg. He means lags.
Yeah.
For those out. They legs. Walking around.
But isn't that discrepancy just ridiculous to you?
That's really crazy. And then I mean I think the other thing too, I will say like for Domino's, when I think Domino's, I think pizza. I will say Pizza Hut's looked desperate in terms of how they've tried to get so creative. And kind of when you look at a competitor, I mean they're all about like Wing Street, and they did that big push of like, no, we're a wing shop, we do wings. And then I remember them pushing like pastas and all that kind of stuff in Pizza Hut. Whereas Domino's, I mean I think distinctly pizza.
Yeah.
Like kind of keep it simple, stupid.
They do salads now.
Whoa, Barrett, hot take, Domino's salad. Have you had one?
No, I have not.
We're gonna do. I really do think, Barrett, we need to line this up. We need to order a pizza from Papa John's, Pizza Hut,
Little Caesars,
Domino's, and Little Caesars. Blind people, same type of pizza. You know, just pepperoni and cheese, basic. One bite. Everybody has to guess which one's which and say which one's their favorite.
Lunch is going to be awesome
I think
today.
that'd be a fantastic video.
and then just speaking of like numbers, like speaking of and expensive companies, they're trading at like a 32 times earnings. I mean that's nuts too.
It's a growth company, man. People hadn't heard of pizza yet in a lot of places. Yeah, that's.
And we talked about that with Starbucks, because we bought some Starbucks last week about like, you know, companies are like those type of companies, like consumer discretionary food companies are really expensive, but when you factor in growth, it's not as expensive.
Right.
That's kind of like another case, I think.
It's interesting too, though. I mean, I will say one of the things that's interesting when you start to look at their fragmentation is that, I mean, system-wide, again, same store sales up 13%, company-owned up 13.8, franchised up 12.9, international up 6 points. Again, I would think international would outpace. I don't know why. I would just think. I will say anecdotally, and this is probably not something you should invest based upon, but in like the year 1999, I was in Scotland, and my dad and I were just craving pizza, and we'd been in Ireland for like 2.5 weeks, eating real weird like sheep and.
Don't they have good? Isn't that good food? No.
It was like 100% potatoes. It was just like potatoes seasoned with different types of grass or animal, but almost entirely potatoes. But so we were over in Scotland thereafter. Food was pretty good there, but we were just craving pizza. And I remember he and I, we went out to go to this Pizza Hut, not a Domino's, but a Pizza Hut, because we were just craving pizza. And I was like, we got to have this. And we ended up getting there, and I can't remember what it cost, so I'd have to ask him, but it was like insanely expensive to get a pizza from Pizza Hut, and he was just like, screw it, we gotta have it. And then it started pouring down rain, and I just remember us like running through the streets of Edinburgh with a pizza that cost like 8 times more than it should have. It was like the best thing I've ever eaten in my life.
Maybe that's just their business model. They're just waiting for
They're
Americans to come
just
in.
waiting on us to get over there, man. So, you know, maybe when things calm down a little bit politically, people will start traveling more, and we'll see more Domino's international
great
sales
thesis.
growth. That's kind of what we're banking on. So, I would think a Hillary election would be better than the Trump one in that regard. So, if you own DPZ, maybe be looking for Hillary to win this election. That'll probably be all you need.
You heard it here first.
Yeah, hot takes right there. Speaking of political party, coming up next. Political party, you ready to rock? Let's have some fun. Let's jump off with maybe not as much of a fun topic, but bombing North Carolina GOP headquarters.
Yeah, we still haven't figured out the story on that. It's crazy to me that, you know, something like that could happen, and then there's just kind of radio silent. Like no one's really
Very odd.
No one's really talking about it as much as I would have thought. Like this is an aggressive attempt against an agency for government position.
Yeah.
So
Really,
it's
really
strange.
intense. Two things I want to talk on is one, the major presidential candidates' reactions to it, and two, I want to get some perspective from you in a minute on the read-through of the bombing itself, and I'll kind of frame that in a minute. But interesting reactions. We talk a lot about politics. I think if you listen to this, you'll know that we're not real big fans of either people involved as human beings. But Hillary Clinton says, immediately after the attack on the Orange County HQ office is horrific and unacceptable. Very grateful that everyone is safe. So, seems like a reasonable
And what do you
response.
think?
Trump. Animals representing Hillary Clinton and Dems in North Carolina just firebombed our office in Orange County because we are winning.
Wow.
Hot tape.
Animals.
Animals.
Man, like Harambe resurrected or something.
Harambe is back, and he is a Democrat. It
I
would,
guess
it
so.
would appear. So kind of interesting takes there. Interested in your perspective on this because, like you said, we haven't heard a whole lot about it, but I do think that most of what I've heard has been kind of this shifting narrative over almost how we view these events in light of Trump's, I don't know what the right word is to call him, his bombastic rhetoric.
Right.
And I think you have one school of thought that kind of says he encourages this type of reaction. He pushes this, and people reference, the riots that he's had at his events, even among his own supporters, things like that. But then you have this other side of the rhetoric that is kind of, no, this is ridiculous. Not everything can be blamed on Trump. What are your thoughts on that? Because I do think it's an interesting conversation, because on one hand, whether the way he speaks would inspire any kind of violence out of me, it wouldn't. It hasn't yet anyway. But at the same time, you do kind of seem to start to get a pattern of, okay, a lot of people really dislike this guy. And maybe somebody less opinionated, more moderate, wouldn't incite that type of violence. But at the same time, is it his fault? Does that make sense?
I think that's a great point. And I think one of the problems with how he's gone about doing things is that it's almost made it okay. There's been a license almost to talk, to really, Hillary said quoted Michelle Obama saying, when they go low, we go high. But I haven't really seen that borne out in actually what's taken place. And in fact, I think that what's happened is that how he's perceived and some of the things that he says almost gives people a license to
hate.
to do something that they wouldn't normally do. And we've seen this with a lot of protests in the past too, especially in the recent past. Like with the Occupy Wall Street thing. I know that when I was in Eugene, we got vandalized pretty badly by the Occupy Wall Street folks.
Because you were Wall Street.
Yeah.
You're the epitome.
Right. we were a really small shop. It was just me and another guy. And
Keeping the other 99% down out there.
But it just gives people this license. They see capital, they see capital management, they see something with the name of bank, and now they see something with Trump or GOP, and now all of a sudden they have this license to do something that reasonable, rational people would not normally do. And so it's interesting how human nature works in that regard.
Yeah, and I think that's like the challenge. I think that my stance on voting is that everyone should vote for the candidate that benefits them the most. And I think a lot of people would disagree with that. They would say that's selfish. I favor informed selfishness over broad projection. In other words, I don't think I'm capable of truly discerning which candidate's better for the entire nation for 4 years. And I feel like, not to brag, but I feel like I'm significantly more informed than the average voter. I stand by that assertion. I may be totally wrong, but just based on things I read and hear and see and how people vote and demonstrate their own inconsistencies, I do think I'm more informed than the average voter. I hope so. I think you are. I think all of us in the office are, just for the conversations that we have. But so my stance is kind of vote for whoever is the best candidate specifically for you, who benefits you the most. But I think what becomes challenging is, I think most people do think that way, but they try to project that onto everyone else. And what happens then is you take whatever specifically benefits you the most, and you disagree with everybody else that disagrees on that one issue, and you kind of project it. And so therefore, I think to a lot of people, probably the people involved in this bombing, it is incomprehensible that you could vote for Trump for any reason other than he's sexist, he's racist, he's bigoted, all of these things, because that's what they see.
Right.
And that's the opposite of the candidate they have chosen. It's completely beyond them to give any credence to things like, oh, well, I just flat out disagree with Hillary Clinton on policy issues. That's incomprehensible to many people. It's incomprehensible to many people that we would care about a conservative Supreme Court justice being appointed, and the idea that Trump may be the best fit to do that. A lot of people just don't get that. I think it's really easy for us to form, these opinions on what we just, and it goes both ways. I mean,
Right.
there's tons of reasons why there's Democratic candidates in the past that I just don't quite understand. Bernie Sanders would be a fantastic example of that. Obviously, he's not running, but it blows my mind that people actually were going to vote for that guy, simply because the things that matter to me the most are smaller government and economic issues.
Right.
And he was atrocious on those things. But at the same time, I think we all need to kind of recognize there's things that are appealing. Let's all recognize what we're appealed to, and let's also say, okay, we don't all have to agree on the same priority issues.
Right.
And I think that's kind of where you get this huge backlash. I have a really hard time blaming Trump for what happened at the GOP. I think a lot of people out there are, and they're saying, oh, he incites these riots, he does this, he does that. He speaks.
I mean, it's an excuse.
Exactly.
It's allowed them to.
There's not an excuse for doing anything illegal.
Right.
You certainly can't blame the figurehead of one of two political parties for it. That's a really slippery slope if we start saying he caused this or was in any way, responsible for this.
And you look at the successful protest movements throughout history. It's been people with a high degree of conviction and a high degree of, we have to operate within the laws that things, otherwise we can't get anything done. It's interesting to your point. I would actually take the other side of your argument that you should vote for what's best for yourself. My concern is that can get to a point where 75% of the population is voting for what's best for themselves, and you got 25% on the other hand, and those 25% kind of get overwhelmed by the 75% who maybe just
the 47%.
The 47%. So it's interesting, but I think reasonable people can have disagreements on these sort of things. But indeed to go and firebomb an office like that's taking it to a whole other level.
Yeah, it's definitely next level. Speaking of next level, the debate tomorrow night, Wednesday night, we are going to do a recap podcast here Thursday morning. Probably going to build it in with some investing talk, I think, just so that we can, kind of bring everything holistically, and also put a wrap up on debate season because it's the last one. What are we looking for? I mean, I guess I hate to make everything about Trump, because you do have another candidate who's significantly, I think, by most accounts in the lead, and we'll talk about that in a minute. But what are you looking for out of the debate, or what does Trump do? Where does he go from here?
Well, someone has all the momentum. I mean, I think Hillary is really, really scared right now.
She's reeling, man. She's bombing headquarters, sending her animals to bomb headquarters of the GOP offices.
You have Trump, who's really closing the polls really quickly. He went from down 11 to down 10. So he's just keep getting 1 point
by November 28th on election day, like he said.
Without being facetious, Hillary's obviously in the driver's seat.
Yeah.
She just has not to mess up. She has some. It'll be interesting to see how she defends things and how the debate goes, because I think you have a few different dynamics. The first dynamic is the WikiLeaks that have come out, and all the controversy around that. Then you have the bombing. So she has a little more to defend, and then. It's also, but at the same time, it's going to be moderated by Fox News' Chris Wallace. So if she goes about it the right way, she could just completely deflect all that and say, this is just Fox News.
Yeah.
out to get me yet again, right-wing conspiracy over again. And a lot of those attacks and a lot of those criticisms may just fall on deaf ears. And more than that, this is the third debate now. People were sick after the first 20 minutes of the first debate.
Yep.
So it'll be interesting to see how many viewers actually show up, and what the actual reception is. Have people just made their minds up already?
Yeah. I think the only way Trump gets back in this for real, it's going to sound like a ridiculous thing, but he almost needs to tie something like the bombing in North Carolina directly to Hillary Clinton. Like, I remember that's like the only scenario I can see in which he like actually swings this back their way, where there was physical property damage done by Hillary Clinton directly. Someone like they need that email leaked.
Right.
The WikiLeaks thing, it continues to baffle me just on two fronts. One, how little the attention on them is, and number two, I don't know how much to read into this, but I listened to a number of podcasts, and a lot of them are kind of like, this is normal campaign type emails. Like, this is pretty innocuous, and I think there's some credibility to this. They kind of said to really understand these emails, you'd have to know like the whole context. You almost have to read every one of the emails to really understand what's going on. It's not enough to just see the screenshots and what's highlighted by WikiLeaks and things like that on Twitter or wherever it may be. So I do think there's some truth to that. I mean, I think if you went through all of my emails, you would see stuff that you could isolate and say, this looks really bad.
Right.
But then if you saw the whole email thread and you read every email I have, maybe it makes more sense. Maybe it doesn't look like I'm being short with a client. I'm actually answering a question in the quickest way possible because they need an answer as quick as possible. You know, but you might read that out of context and say, well, that was rude. I mean, there's all kinds of stuff like that.
I think one of the biggest problems that Hillary could have would be if somehow all these scandals that she's exposing, or the media is exposing on Donald Trump, is somehow linked to her, and that she's planting these stories, and that she's getting these women to come out and say, you know, this is what Donald Trump did to me. And if they can link that, all of a sudden that ruins the credibility of those attacks, and it feeds into this narrative that Donald Trump has been saying for over a year now, that the media is against him, everyone's against him, and look at the evidence now. You can finally see it after all this time, directly linked to the Clinton campaign.
So we start looking at the polls. You mentioned kind of the spread, and we do see a lot of spread. I mean, I think we have the Wall Street Journal having her by 10 points, then we had, who was it, New York Times?
ABC, I think, was down 4.
ABC
and
down
I think
4.
that's probably a truer 4 or 5.
It's pretty, so it was interesting. 538 talked specifically about those two polls on their podcast yesterday, and they basically said if you look at any polling, there should be a margin of error between 2 and 3 points, and he said that should go for both candidates. So at a maximum, you should be 6 points off. And what they said to really keep an eye on is, you know, if the true margin of error, or if the true polling is a 4-point lead, you'll actually see a few polls that have Trump in it ahead. And he kind of referenced how it was 3 or 4 weeks ago where you had a couple that had Trump up by 2, and it's basically, hey, the margin of error swung literally Trump plus 3, Hillary down 3, relative to the actual average of the polls. So he said that, but the big thing they pointed to is, I think this was the first week in which there was no major poll with him tied even. So they said you're kind of seeing this kind of continue to rise. I think the average, they said, was between 4 and 5 points, and that's kind of the number they're basing their stuff on. But it's interesting, they started talking about kind of the psychology of down ballot voting. So, you know, people voting actually for reps and for Senate members. And it was interesting, they kind of made 2 different cases. Number one was there's still a very large disconnect between Hillary support and Democratic support in those down ballots, which was interesting. It's certainly a testament, I think, at the first level, a testament to how weak of a candidate Trump is. Not surprising there, I don't think. You know, I do think you have a lot of the section they talk about is educated white women voting for Hillary as opposed to for Trump, even though they may vote for Republicans in these down ballot races. But so that's number one. But number 2 is just the issue with turnout. Like, how is turnout going to impact that? Because, you know, they kind of made the point there's no reason to think that we're going to have an incredibly strong turnout for her, stronger than normal on the Democratic side. But they said almost, hey, if Trump's lagging by this much, you might actually see a boost, and you might actually see a stronger finish among Republicans, you know, throughout the House. But kind of something.
Yeah, I mean, to me, it gets down to the point, I think it'll be really difficult for the Republicans to lose the House.
Right.
and then you're cycling over the 2010 election where the Republicans kind of came to control. They didn't get control in the Senate, but they really made a move there. And so you're cycling over that, and that could make things trickier.
Yeah, they have the Senate. I think the projection right now is at like a 64% chance that goes to Democrats. But they also mentioned several specific races that they thought are being hypothesized almost. And one in Indiana, I know for sure that people are just assuming will go Democratic, and they're kind of saying, we don't think it will. And that could literally be the swing, between having a one-seat advantage and not.
Right.
So all that stuff's kind of interesting. We haven't talked a lot about down ballots, but again, do your homework, people. Like, research this stuff. You can go to a bunch of sites and actually see who's on your ballot and see their platforms and see their issues. So make sure you know who you're voting for that. You don't have to toe the party line on everything. And then the last thing I have that was interesting, just kind of a closing point, on 538's podcast, I've got this guy, Harry Enton. He's one of my favorite, political data scientist, stat dudes. I think that's his official title, but they call him the whiz kid. He's a young guy. But he mentioned this kind of in passing, and I'm thinking about sending them a question because they'll answer questions sometime. But he mentioned in passing that either of these candidates, there's a decent chance, I think is what he said, that they are inaugurated and immediately go into impeachment proceedings, which is kind of insane to think about. Like that almost seems like an extreme right wing. Oh, she's going to get impeached as soon as she gets elected. But this is a pretty neutral. If anything, I would say he probably leans to the left, at least in the sense that he's very anti-Trump. But kind of interesting that he kind of said that about either candidate. They might immediately open up with impeachment hearings. So I'd like to know what he means by they might. What, like, is he putting a percent on that, or because that's pretty wild to think about, and also very depressing. So way to go, country. These are our two best. Do better in 4 years. Y'all have a great day. See you tomorrow.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.